The world is sitting on a mountain of debt. But this isn't just a big number for economists to argue about. It's a ticking time bomb, and the fuse has already been lit. Trillions of this debt, taken out when interest rates were near zero, are about to reset at today's higher rates. This is the great refinancing, and it could make the 2008 financial crisis look like a minor tremor. Today, we'll break down exactly how this is going to unfold, and more importantly, how you can protect your wealth before it's too late. Skeptical. The story you've been told about the economy is one of recovery and strength. But behind the curtain, a very different story is playing out. A story written in red ink, with numbers so huge they almost feel fake. By the third quarter of 2025, global debt, that's everything from government loans to company borrowing and your neighbor's mortgage, has ballooned to a staggering $346 trillion. dollars. This isn't just a number, it's a sign that something is deeply wrong. The entire world has been binging on cheap loans for more than a decade. We're going to dissect this number, figure out where it came from, and trace the path of that lit fuse as it snakes its way toward the heart of our financial system. Then, we'll shift from the problem to the solution. I'm going to lay out a clear, no nonsense plan, not just to survive the storm that's coming, but to position yourself to come out stronger on the other side. This isn't about spreading fear, it's about understanding the game, seeing the risks, and making smart moves. This mountain of debt, $346 trillion, dollars, doesn't just affect banks and countries. It trickles down to all of us. From the price of things you buy to the future of your job, this debt can change everything. Let's break down where all this debt comes from. To really get what we're up against, we have to break down this monster of a number. The easiest way to think about it is in two main buckets: government debt and private debt. Government debt is what countries owe. As of late 2025, this chunk alone is more than $100 trillion dollars globally. This is the money governments borrowed to pay for everything from roads and hospitals to pandemic recovery. And now, just to pay the interest on the money they already owe. For decades, the thinking was simple: borrow and spend to keep the economy going. They thought the bill would be a problem for the future. Well, the future is here. Globally, governments owe almost as much as the entire world produces in a year. To put it in perspective, if your household made $100,000 a year but had $94,700 in debt, growing faster than your salary, that's the kind of debt we're dealing with globally. Some countries are in way worse shape. Japan is leading the pack with a mind boggling amount of government debt at a 230% debt to GDP ratio. Decades of stimulus spending have created a debt mountain that is, by any normal standard, impossible to ever pay back. Not far behind are countries like Sudan and Singapore, and even developed nations like Italy and the United States, whose government debt has climbed to over 124% of everything it produces in a year. The US, with its own debt now past $38.4 trillion, dollars, is a huge concern. Its debt path is starting to look like fragile economies, which is a massive red flag when the US dollar is supposed to be the world's stable money. Even in emerging markets, which were supposed to be the world's growth engines, things are getting grim. China's government debt has shot up, mostly because the country keeps propping up its big companies. And while other emerging markets have lower debt on average, they are extremely vulnerable to these shifts in global money. Then you have the other half of the problem: private debt. This is all the money owed by companies and regular households, and it makes up a colossal portion of the global total, with non financial corporate debt and household debt together accounting for over $150 trillion. dollars. This is the result of decades of companies borrowing for their own purposes and families taking on bigger home and car loans. Altogether, for every dollar of value created in the world, there are more than $3 of debt hanging over it. This didn't happen by accident. It was caused by government policy. After the 2008 crisis, central banks everywhere dropped borrowing costs to the floor. They pumped the system full of cheap money to get people borrowing and spending again. The COVID-19 pandemic was like throwing gasoline on that fire as governments unleashed trillions more, inflating the debt balloon even further. The idea was to build a bridge to future growth, but they didn't just build a bridge. They built a fragile system that depends entirely on the one thing that was never going to last: practically free money. And now, the foundation of that bridge is starting to crumble. For more than a decade, the global economy has been living in a fantasy world, a world where money was almost free. Governments, companies, and people borrowed trillions at interest rates of 1%, 0.5%, or even less, but that world is over. The era of free money is gone, and the bill for the biggest debt party in history is finally due. This is the ticking of the time bomb. The heart of the crisis is something called the Great Refinancing. Imagine you took out a loan for your house with a really low interest rate. At first, everything is great. Your payments are small. But when that low rate expires, your new rate is whatever the current market rate is, which is now way higher. Suddenly, your monthly payment doubles or triples. You can't afford it. This is happening to the world's biggest borrowers right now. The Great Refinancing is when they will have to pay back their loans at much higher rates. That's exactly what's happening. Trillions of dollars in loans that were given out during the cheap money era are now coming due. In the US alone, about a third of the government's publicly held marketable debt has to be refinanced in just the next 12 months. But it can't be refinanced at those ridiculously low old rates. It has to be done at today's much higher rates, which have soared as central banks try to fight the very inflation their money printing helped create. The results will be catastrophic, and they will ripple through every part of the economy. First, you're going to see zombie companies die off. Zombie companies are businesses that aren't profitable and only survive by borrowing new loans to pay off the old ones. The private credit market propping up these firms has ballooned to an estimated $2 trillion. As borrowing costs rise, these companies won't be able to refinance, leading to mass bankruptcies, layoffs, and economic slowdown. Second, governments will be pushed to the breaking point. As they're forced to refinance their own mountains of debt at higher rates, a bigger and bigger slice of their money will be eaten up by interest payments alone. In the United States, net interest costs for fiscal year 2025 hit $970 billion, with the Congressional Budget Office noting that payments have now surpassed $1 trillion for the first time ever. This leaves them with an impossible choice: either cut public services like healthcare and education, or raise taxes on an already struggling population. There's also a third, sneakier option: print more money to pay the bills. This leads to runaway inflation, which is just a hidden tax that destroys the savings and buying power of every citizen. The worst pain will be felt in developing countries. Low and middle income nations are trapped. The cost to pay their debts has skyrocketed. Today, an unbelievable 3.4 billion people live in countries where the government spends more on interest payments to foreign lenders than on health or education for its own people. This isn't just a financial crisis, it's a human catastrophe in the making. This isn't some far-off theory. The 2008 financial crisis was started by a collapse in a tiny corner of the financial world. The Greek debt crisis a few years later almost took down the entire Eurozone. What we are facing now is so much bigger. It involves the entire global system, and this time, there are some new, explosive ingredients in the mix. AI and crypto are often touted as revolutionary, but they're both built on debt, And when that bubble bursts, it could take down the entire financial system with it. This is a triple bubble: debt, AI, and crypto, each one fueling the instability of the others. Let's start with AI. The story you hear is about amazing tech that will change the world. The technology is transformative, but the financial story behind it is one of reckless, debt fueled gambling. The race to build AI has kicked off a massive borrowing binge. In 2025 alone, top companies are on track to borrow a record amount of money, and a huge chunk of that is going straight into AI. Big tech companies are taking on tens of billions in new debt to build the data centers and buy the power hungry chips needed for their AI models. The AI hype is used to justify high stock prices, which makes it easier for these companies to borrow even more money. But here's the catch: this is all built on guesses about future demand. Real world use of AI is way lower than the hype suggests. It's a classic bubble. A new technology sparks a wild spending frenzy that's funded by easy credit. When credit gets expensive, like it is now, and the promised profits don't show up, the bubble pops. Then you have the crypto world. For years, people have sold assets like Bitcoin as a safe place to hide from the problems caused by out of control government spending. But for most people, it just became another casino for gambling, fueled by the same ocean of easy money that inflated the debt bubble. The crypto market is known for wild price swings and a lack of real value for most of its assets. It became the ultimate risk on asset, soaring when money was cheap and crashing when fear set in. As the debt crisis unfolds and money gets sucked out of the system, the speculative fever that propped up thousands of crypto projects will disappear. The crypto ecosystem is headed for a brutal cleansing that will wipe out trillions in paper wealth and add to the financial panic. This is the unholy trinity. You have a historic debt bubble that's starting to pop. That is putting pressure on the AI bubble, which needs cheap debt to survive. At the same time, the crypto bubble, a creature of pure speculation, is facing its own crisis as the money dries up. Any one of these bursting on its own would be a major disaster. All three bursting together will set off a chain reaction that overwhelms the entire system. Now that you see how fragile this system is, make sure you subscribe. Understanding the problem is just the first step. The next part is the most important: what you can actually do about it. To survive the debt storm, you need to take action now. This moment of crisis is also a moment of incredible opportunity for people who are prepared. The transfer of wealth that will happen during this collapse will be one for the history books. The key is to make sure you're on the right side of it. This isn't about complicated financial tricks or trying to perfectly time the market. It's about getting back to the basic principles of protecting your wealth. This is your survival guide. Your biggest weakness in a debt crisis is your own debt. For years, we were told to use debt to buy bigger houses and nicer cars. That game is over. Your absolute number one priority has to be paying down high interest debt. I'm talking about credit cards, personal loans, and car loans. These are financial anchors that will pull you under. The interest rates will only go up, and your ability to pay them will go down as the economy gets weaker. Make a plan. List your debts. Order them by interest rate, and throw every spare dollar you have at the most expensive one first. Cut your spending to free up cash for this mission. Becoming debt free is like building fortress walls around your family. As for your mortgage, just make sure the payments are manageable and ideally locked in at a fixed rate for a long time. Step 2: cash is king. You might hear that holding cash is a bad idea when prices are rising. But in the short term, as a financial crisis starts, cash is king. Cash is oxygen. When a debt bubble bursts, the price of assets, stocks, real estate, everything can fall off a cliff. Credit freezes. In that world, the person holding cash has all the power, while everyone else is forced to sell their assets for pennies on the dollar to cover their debts. You get to be the buyer. Your goal is to build up a cash reserve, enough to cover 6 to 12 months of your essential living expenses. This cash does two things. First, it's your emergency fund. If you lose your job, you can survive without selling your investments at the bottom. Second, it's your opportunity fund. When the panic is at its peak, you'll have the money to buy high quality assets at a huge discount. Keep this cash in a safe, easy to access bank account. It's not an investment. It's your insurance policy and your war chest. Step 3. Own real things. After the first shock of the crisis, the government response will almost certainly be to print a massive flood of new money. This will cause the money in your bank account to lose value. That's why your long term survival depends on owning real, physical assets that can't be printed out of thin air. First, that means physical gold and silver. For thousands of years, precious metals have been the ultimate store of value in times of chaos. They are recognized as money everywhere, and you can't just make more of them. Owning physical gold and silver that you can hold in your hand is not gambling. It's an insurance policy against the system failing. Second, think about productive property. This could be owning your own home outright, which gets rid of your biggest monthly bill. It could also mean owning property that makes you money, like farmland or rental properties, as long as you're not deeply in debt for them. The key is to own physical things that people will always need. Just be careful of real estate bubbles in big cities, which are also fueled by debt and are likely to pop. Step 4. The ultimate asset is you. In any economy, but especially a bad one, your single greatest asset is your ability to earn an income. Your skills are a type of wealth that can't be taken away or lose value to inflation. This crisis will change the economy. Some jobs will disappear, while others will become more important than ever. Focus on developing practical, in demand skills that are tough to replace with technology. This could mean learning a trade like plumbing or electrical work, jobs that are always needed. It could mean getting good at resilient modern fields like cybersecurity or supply chain management. It could even be as simple as learning how to grow your own food or fix your own car. The more you can do for yourself, the less you have to worry. Step 5. Localize your life. The crisis will show just how fragile the global system is. A financial problem on the other side of the world can mean empty shelves in your local supermarket. One of the smartest things you can do is reduce your dependence on that system. This means thinking and acting locally. Build a strong network in your community. Get to know your neighbors. Support local farmers and businesses. This makes your local economy stronger and builds a web of support that can be priceless during a crisis. Think about building up a pantry of non-perishable food and essential supplies. This isn't about being a doomsday prepper. It's about creating a reasonable buffer for your family against possible problems. This 5-step plan isn't complicated, but it takes discipline. It means you have to reject the get rich quick fantasy of the bubble years and adopt a mindset of strength and self reliance. We are at a historic crossroads. The path we're on, paved with a $346 trillion mountain of debt, simply cannot last. A painful correction isn't just possible, it's guaranteed. The Great Refinancing is the trigger, a mathematical certainty that will force a day of reckoning. You can choose to ignore the warnings and hope the system somehow lasts forever. Or you can choose to see the world as it really is and take action. This is not a message of doom. It's a call to empowerment. The problem is global, but the solution starts with you. To survive the debt storm, you need to take action now. Start by paying off high-interest debt, building cash reserves, and making smart investments in things that can't be inflated away. You are building a new foundation for a stronger future. The system is fragile, but you don't have to be. Prepare yourself, protect your family, and get ready to turn this coming crisis into your greatest opportunity. What part of this financial puzzle worries you the most? Is it the corporate debt, the government spending, or the new speculative bubbles? Let me know in the comments below. And if you found this guide valuable, subscribe and hit the notification bell so you don't miss our next breakdown. Stay prepared.